All right, why don't we jump into it? We got some more people in here. And guys, please do share at the top of the space. We have the tweet about the space. Yeah, why don't we jump into it? Lambros, Hyperdrive, welcome, guys.
Yeah. Should I do a quick intro first?
Yeah, absolutely.
I'm Lambro from Hyperdrive. We essentially do three core products. The first product is tokenizing HLP. We will be launching that as soon as we'll be launching that. Mainly waiting for two things. The first thing is when Hyperliquid launched the pre-compiler. I can talk more about the pre-compiler later. And native USDC coming on Hyperliquid product. It's a related lending market, meaning it's not a shared pool. It's various market, meaning we can do a few different markets in with different risk profile, allowing more strategies. And we can do one click. There are some one click leverage up strategies coming up as well. So users don't have to menu loop things themselves. And the last product we have, it's LST called Hyped. The ticker is dHYPE, which is an LST. That one is waiting for pre-compiler as well, as our LST is designed in a way where we heavily rely on pre-compiler, so there's better trust assumption, etc. Sorry, it's a little bit early for me.
Yeah,
I
no,
just
no
woke
problem.
up, so I realized I'm stuttering a little bit.
No, you're doing great. It's a lot of complicated stuff, and I think we just tackle it one by one. So one of the first things you said was talking about precompiles and native USDC. A lot of liquid staking. I know we've had Kinetic and others who are waiting for precompiles. A lot of people are waiting for precompiles. Do you want to talk a little bit about what precompiles will unlock for what you guys are doing and what's going on with the native USDC element? How that's going to work?
Yeah. Just to talk a little bit more about precompiler. Precompiler, in a very simple way, it's something that allows the Hype EVM to communicate with the Hype, or Hypercore, which is the perk side. Um, and this is what makes HyperEVM exciting, right? That means like you can imagine that in the future, it can be my liquidity on liquidation does not require on purely just the liquidity on the AMM swaps, but I can actually liquidate people via on the perk side, on the spot sides, etc., which gives a lot more liquidity. And this is one big advantage that Hyperliquid will have over other chains, that kind of thing. Um, so when that comes on, it will allow us to create I would say custodian of certain funds with better trust assumption, so we don't actually have to. So without precompiler right now, if you were to tokenize any trading vaults on Hyper Core, what happens is essentially you have to create like EOA account. The keys has to store in a server somewhere, and then essentially they are minting a HLP. They're doing the HLP for you, and then they're minting a token out for you to hold it to earn yield on it, kind of thing. By not using the precompiler, it gives you a first mover advantage. However, there are some trust assumptions and efficiency problem going with that way as well. Basic. And we
Yeah, the
decided to.
precompiles unlock the potential of this, right? Like let's HyperEVM and Hyperliquid handshake actually without you having to trust some third party implementation.
Yes. So we're very excited for it. It is pre-compiler has two parts. One is read, one is write. Read been out for almost a month and a half now, I believe so, around a month and a little bit more. And write, it's coming up in write just launched on testnet like last week, early this week, or early in a week. So we are hoping that it will come very soon.
Yeah, I think everybody is, but this is how it is with Hyperliquid, man. They have to make sure. And this is a critical part of it. I mean, reading is relatively simple compared to writing, right? To
Yeah.
actually interacting. So who knows, But then again, everybody didn't know when HyperEVM was going to launch, and then one day, like, bang, it was there. Like, it could be any day now. You talk
Yeah.
about tokenizing vaults like HLP, but also user vaults. How do you think that that's going to work? Are you guys going to run your own, or are you going to enable other people to tokenize their vaults, or what are you thinking there?
So we're gonna start off with just HLP first, but technically wise, we can launch any votes that we wanted. So right now for user votes, the top, let's say the 10-1, the problem with that is, well, I wouldn't say problem, but like I would say HLP is too good in a sense because the max drawdown of HLP is only 4%, and around 80% of the days is up only, meaning it doesn't lose money on 80% of the day in the year. So meaning it's a very good asset to leverage up at, let's say, 3 to 5x without problems, basically. But with most other directional trading vaults, copy trading vaults, the problem is because of the drawdown, so there might be a lot of liquidation. We're currently looking at different vaults that maybe we can do that on to continue to launch this tokenized vault. Mainly for the main advantage for users to start tokenizing vaults has two things. So let's say you are the trading vault, like the typical trading vault of long hype and BDC, long hype and BDC and a short garbage vault, right? The TVL is around 4 mil. The chart basically been up only as well. If you are a small directional trading liquid fund that want to get cheaper liquidity, technically you can you can tokenize that with us, and then get more liquidity, using that as a collateral to borrow some USDC. Also, I believe as pre-compiler comes on, there will be a lot more efficient funding rate, ARB strategies, etc. So I will foresee there will be more trading vaults that are relying on certain trading strategy that can grow in certain capacity without much downside, basically. So we're but like future proving it, and obviously we believe in Hyperliquid. So I think this is going to be the next step after eventually, basically.
I'm curious if you've spoken to Julian at all about like, did they plan on adding more complexity to the vaults, like any sort of customization to it? Because they released the product and it's great, but they haven't really done any updates to it. And I think there's probably quite a few things they can do with it to enable stuff like this, right?
Um, I'm actually not super tuned into the topic, but like I can speak with Kane and see how's that going. But like in general, but purely from looking at the returns and the strategies that the other vault's been running, right now it's purely directional, basically.
Okay. Do you want to talk about you're talking about the native USDC? Does that mean you guys are bringing USDC from HyperCore over to HyperEVM?
Yeah, so right now we build our liquidity on USDT zero and USDT zero and USDE. We are still waiting native USDC to come on to Hyperliquid. Obviously we wouldn't bring it on ourselves. We're waiting for the Hyperliquid team. We can actually launch the HLP without those, but there will be some efficiency, like it wouldn't be as efficient, and there will be some slippage problem. So it will quite depending on the launch phases of what Hyper Liquid guys would do. But for now, we're building liquidity just on USDT zero and USDE.
Okay. What else do you want to talk about next about Hyperdrive? Because you guys have a lot going on. You have lending, borrowing.
Yeah, so if you guys want, we can talk about our lending.
Yeah, absolutely.
Yeah, so our UI, I'm just gonna talk through without our UI a little I'm assuming you guys will check out the UI later. So when you first go into our UI, there is like around there's 5 tabs on the left, and then 2 tabs of them are live. The first one is earn. We separate the earn and we separate the borrow is because that we believe will, as everyone, as a lot of people know, that we are the team from ex Luna, and our team background is basically Luna guys, and we believe as we grow this out, lending markets should be focusing on retails as well, right? So we want to make the earn experience a lot easier for users, to allow cheaper borrow rate for like the DeFi users, the more sophisticated users. So in the earn tab, you can see there are various things that you can do. You'll see there are 2 USDT markets, and there are a few things. There's going to be 2 USDT markets, 2 USDE market, 2 Hype markets, and another 2 Hype markets for user to put. Basically, they are so for USDT zero right now, you can supply it for around 6.64% yield, and also And for USDE, you can supply it for 3.89% yield. These markets are isolated. So if you go to the tab below, it is the borrowing side, which is where users can use Hype, UBC, UETH as collateral to borrow USDT zero. The second market is the same thing, but you can borrow USDE. And the last one is LST market, which is dHYPE, borrowing Hype for users to loop. The benefit of isolated lending market is if anything happens to just the USDT zero, the people in the USDE market wouldn't be affected because essentially everything is separated. So this allows users to give to allow us to list certain assets that might can be more risky in the future, etc. So more strategy will come. Uh, when our tokenized XRP comes, we have quite a few strategies ready as well, which will be, let's say, something that's quite exciting in my view personally. It's we can do Hype Delta XRP leverage up, meaning so let's say I can use Hype to borrow USDC. The USDC can go into HLP, and HLP can leverage up to 3x or something. And we will have that in one click, so users can technically stake. It's almost like users are staking the Hype and earning around 3x on the HLP kind of thing. So depending on the yield on HLP at the time, we estimate it will be 8 to 20% of the leverage, basically.
Sick. So you guys have an interesting background. You guys, I believe, correct me if I'm wrong, Hyperdrive isn't a fork. You guys have built it yourself. And you're from the Anchor team, right? From Luna, as you're saying. You want to talk a little bit about, both your experience building that, and it was obviously extremely successful for a while, and then also like what you guys learned from that, and how that informed building Hyperdrive.
Yeah. 1 second, I forgot to mention something. And also, if you click into your wallet on the UI, if you click on any asset, we actually built a bridge for users to bridge over their asset to the HyperCore side easily. So let's say if you're a Hype holder, you can deposit Hype into the USDE market and borrow some USDE. And then within your wallet, you can easily send the USDE back to the HyperCore side to earn yield as well. And yeah, sorry, yeah,
That's what I do all the time. I've used DN4, and it's awesome. But yeah,
yeah. So I joined the team around 3 months ago, so I wasn't in part of the team from the start. But I have heard them speak about a lot of the experience. So I will just add a little bit of color. So essentially, Matt and Kane were like the business guy and the CTO guy of Anchor. Um, Anchor was a fantastic product for them, but back in the days, like everyone just didn't think that UST would have any problems. I'm not going to comment too much on their time neighbors because I wasn't there. But essentially, after Anchor, it got invested by Binance Labs to build something called to build Anchor for BUSD essentially. But after working on that for a few months, as you may know, with everything that goes on, BUSD got cancelled. So we kind of got like robbed by stablecoin twice as the lending market. But while that happened, yeah, for sure. But like they're like Matt and Kane are like determined hardcore builders, right? Like most most builders will have just probably like tapped out and be like, hey, we're winding down, we're closing down, but so and then start a new project a few months down later, right? And because Kane and Matt were HLP users, like I think Matt is quite a degenerate trader, but like Kane is not. He's more of a farmer. And then he was like, hey, so he became a big fan of the Hyperliquid ecosystem. He wants to build something with he want to build on an ecosystem that is just not grind farming. It has native yield. It has a real community, etc. So we became the first batch of builders building on Hyperliquid essentially. And then just because, but obviously, uh, sorry. So like, so back to the point where because they technically they didn't close down Mbit, and we just rename ourselves to Hyperliquid. So that's why there were some fun before on, oh, we just like launch points and bait users to keep farming us. But to be honest, I joined them like a few months ago after speaking with them. I think they are in it for the long run. My money can be highly speculative things, but my time and career should be something that is long-term building, right? So that's why I joined them. Uh, and yeah, I'm trying to let everyone know more about us. And don't I do know that previously Mbit Finance had some points issues, etc. We'll credit them as per the TVL as well. So everything should be good over there on that side. In my opinion, in the long run, people will see that we're here and trying to build real things and not just for a quickie.
Absolutely. Do you guys think is there any contrast to building, like obviously it wasn't you, but it was the team itself. They talk about the contrast of Hyperliquid to building on Luna and then what they think the potential is. I mean, you guys are doing a lot of interesting stuff that isn't just sort of yield farming by itself, right? Like precompiled just on its own is a very interesting part of crypto that we really haven't seen before. This sort of integration between two separate blockchains. How do you guys feel about leveraging that, and what do you think makes Hyperdrive so exciting to build on?
Yeah. So a few things. We are really very excited for Pringballer. Our Kane, I think Kane is like quite active in like the builder feedback towards like Pringballer things. So, I was actually a farmer. I was a heavy farmer in in the Mbit days, which is like a Binance days. I would say the liquidity it's very different, and the users are very different as well. They are more non-institution or let's say, small family office based whales in Hyperliquid, which makes the whole experience a lot more organic. Like you can speak to people, you can get direct feedbacks with whales. And if you're farming on Hyperdrive or if you have any problem, feel free to DM me. I'm always there to answer any more questions. Happy to jump on calls with anyone that wants to learn more about us. But yeah, in in Binance, you will have to try to run deals with people. You will have to give access, etc., etc. Whereas in the community right now, we are 100% organic with zero TVL deals. We do get people asking us a lot of questions all the time, and I think from a builder perspective, I've been active in various ecosystem. I've been around crypto since like 2019 in DeFi. Like I'm normally the shit talker, the troll in the community, but like Hyperliquid ecosystem is the first time that makes me feel a little different, especially post token. Like I used to be a big Arbitrum guy. Like I still love it, but like the token just like doesn't make sense and doesn't go align with the community in some sense, right? And hyper liquid just kind of they did everything that doesn't really make sense on the playbook, but works everywhere. Like they don't tell you what is launching, they don't give you a clear roadmap, but the team just delivers and delivers. I was late to the hyper liquid ecosystem. My airdrop was good, but yeah, like was good, but like wasn't great. It wasn't and I'm still actively trying to be part of hyper liquid ecosystem right now and trying to build there, trying to yeah get by basically. And that's why I got in Hypio early because of that.
Some days. So for all like the Hypios listening, what would you say to them for like why they should be used like Hyperdrive? What do you think it adds to them today or in the future after precompiles?
Yeah, so I think why should you use us? I think we're one of the better products, good farms. If you have some idle stable coin, why not earn 4 to 6% APY with us while earning some points, which will yeah. Uh, and I believe with our one-click strategies coming up and the pre-compiler come out, people will notice how different our product will be. And I'm just excited in general. Like, even if you don't plan to use us, feel free to click around first. And I'm sure eventually when pre-compiler comes out, you guys will be amazed by it.
Like, are there plans for a token, or are you guys going a different route?
Yes, we are going for a token. We a little bit background. So we closed our round like just before I joined. or a month before I joined. Well, the reason why I joined them is that they actually rejected money. We closed our round at 25 mil FDV. The team didn't want to raise more money that they needed. We have enough runway for another 2 years, and we think that's more than enough for finding PMF. We do plan to launch token once pre-compiler comes on, and depending on how our product will get PMF, but we wanted to launch our FDV not at a high FDV and slowly build it up. So that's the plan for now.
Yeah, that makes sense. Maybe if any ideas, have any questions, we could do a little question sessions before we wrap it up today. If there's anything else you want to talk about, by all means, especially while we wait for them. Anybody else questions?
Yeah. If anyone have any question, I'm happy to answer.
But yeah, no, I think it's super promising. This is, an example of just another project. There's a lot of projects who are making interesting uses of pre-compiles. We've had Kinetic on a bunch of times. Now, HyperSwap, I believe, will be fetching liquidity natively from the spot markets that are also on the EVM once pre-compiles go live, I believe. There's a number of people trying to do interesting stuff. Okay, here we go. Some of the AZ tech.
Yeah, for sure.
How's it going, AZ?
Hey guys, thanks for having me. Yeah. First, I want to congratulate the team for being still present and also progressing and your move to HyperEVM. So I've been here with a friend like from day one, from the old BNB days, and even watched before cooking. So really amazed by what you're doing and building at the moment. And the question I have is, now that you got like a pole position in the HyperEVM and you're building up for scaling, do you think about launching your own US dollar derivative again, like HUSD?
No, we don't plan to launch our stablecoin. We wanted to facilitate different stablecoins with enough liquidity on Hyperliquid ecosystem or any yield-bearing assets. I have been speaking to quite a few non-Hyper EVM native assets as well to try to maybe look potentially bring them on for users to farm or create DeFi strategies on. But we don't plan to issue any of our own synthetic stablecoins yet. And thank you for following us since the start.
All right. Yeah, it has been a pleasure, and I'm really excited for the next big steps and you scaling up, and especially that liquidity vault once it's opened and the product is ready. Thank you.
Thank you.
I have a question. I don't know if we may not get another one, but I have a question. It's a fun one. There's all these basis trade products going on, obviously working in the yield space as you are, USDE namely. A lot of these products basically tokenizing basis trades. I'm sure you're familiar, obviously, you mentioned a bit of it. The setup is kind of interesting. Like, how far is this going to go? How can it scale? And does it pose some sort of endemic systemic risks to crypto at large when you have this much sort of inorganic spot buying and then on the same side, inorganic shorting with these basis trades? It's kind of similar to the 1987 stock crash where everybody was doing insurance on their stock positions. And then once it started to unwind, and people wanted to close under like strange conditions. I was thinking about it last week during the Iran stuff. It was like, if there's one situation that could really fuck up these basis trades, it's like if this Iran war goes crazy. I don't know. Have you thought at all about the steady growth of the basis trade product in crypto lately?
Yeah. A little bit background. So I used to be in a fund that runs a lot of funding rate arbitrage, so I'm pretty familiar with it. The good thing and the bad thing about funding rate arb is that it's actually is very reflexive. So in a way where people are so used to adjusting, it's not a strategy where you like just set and forget kind of thing. And I've been looking at USDE for following them for a very long time, and the way it goes. I believe the leverage on there is actually not that high right now, so I don't see it being a upcoming problem. And the way they adjust their APR is very quick. It went from 4 to 8%, from 8% to 4% relatively quickly. So I'm not too worried mainly on USDE side. But as per other products, I'm not 100% sure. In terms of scalability, I think funding rate is a strategy that can go as high as people want, depending on how degenerate we are trading on the perk side. But the thing is, like, it doesn't. You just don't know how long it will last. I would say, like, we are getting to the point where it's not gonna go like as a product, not as a fund. You probably can't go over maybe, let's say, 10% anymore in the future. I think just because there's so many this type of product in the market.
Yeah, and because we just had liminal launch, for example, and it's going to let people put, probably soon it'll be like 100 million in just passive basis trades just on that, and then you guys and all these other people doing it. For the people who don't know, like since you do have experience, the basis trade, obviously, I think a lot of people understand it by now. It's like, you short an equivalent amount that you buy spot, and then you collect the funding rate, and potentially the staking yield is a common way that people are doing it, right? How does the rebalancing work? Could you explain a little bit about how they rebalance it as prices get dislocated or move around?
Yeah, so there's a few things to think. You actually do it manually yourself as well, depending on how you do it. Like, okay, I can talk it from the start. So, funding rates, maybe I can talk a little bit on funding rates as well and synthetic price and perks as well if you want. So there, spot price and per price is actually two different prices. If you look at them closely, there's actually a small premium or a small discount or small premium on it. So let's say it's technically a different book and liquidity. You can see it that way. So what happened is that Arthur Hayes created this thing called perks, which is actually quite innovative back in the days. There's two things to wait. So if the synthetic price and the spot price is different, how do you make sure they're pegged together? They do it with something called funding rate. So funding rate, depending on the perk dex, that is essentially a rate that charges or gives you yield every hour, 4 hours, 8 hours, depending on the perk. So funding rate typically derives in two things. So one is like the difference between the spot price and derivative price, the long short ratio of this token. So that's why you see some shitcoin with like mega negative funding rates, kind of thing, because everyone just want to short the shit out of it. So how the funding rate works is that if everyone is shorting, that means most of the ratio is going for the short side. Likely it will derivative from the spot price a little bit as well. So the funding rate will be negative. So if you open a long position, technically you will be earning the funding rate difference. So let's say looking at something like IP USDT right now, which is something that I'm trading myself personally on Bybit, which the funding rate fee is every 2 hours right now because most people are shorting it, including myself. As a shorter, I'll have to pay 0.0412% per 2 hours on my shorts of my total position, which you can imagine that's quite a lot. As someone that longs it, you'll be earning 0.04% per 2 hours, which rounds up around, let's say, 0.5 to 6% a day kind of thing. It's too long. Obviously, you wouldn't long for the yield just because your delta, your price will actually cost more. So what people would do is they would find somewhere to short IP in a cheap way that is higher yield than this yield, which is what I mentioned before, which is a daily yield of around 0.6%, meaning it's likely around what 0.6 times 365, which is around 200% APR-ish. Then I need to find if somewhere that I can short IP in a cheap way. Then I can long it here, meaning that my long ratio of IP and short ratio of IP hedges. That's what we call delta neutral, essentially. And when you're doing these strategies, essentially, we want to make sure a few things. The first thing is the price that you enter on both sides has to be similar, because you might be earning on the fees, but because of the synthetic price and the spot price, or the price between various exchange are different, you lose out on the slippage on the pricing. Second bit is that you need to make sure the funding rate you need to have an assumption of maybe it should last for 2 days or 3 days or 1 day, just because the positioning fees or whatever doesn't cover, is bigger than the yield that you might actually bring on. And secondly, is it worth your time? Because like, let's say you have to, sometimes you can do some cross, centralized arbitrage between two places. For example, like you can short on, typically you can long on Hyperliquid, just because most people are short on shitcoins on Hyperliquid. And then you can long in, Bybit kind of thing. That means that you can leverage on both sides, which brings you even more yield, more capital efficiency in a way. But yeah, that's like a very brief high level overview of what funding rate ARB is.
Awesome. No, I think we love, educating people. I'm sure a lot of people understand, but there's some people who listen but don't. So it's great to have the kind of summary of it. I think we got one last question before we wrap it up here from Rise from Hyperswap. He's asking, do you plan to allow based on isolated lending markets for more degen style isolated markets, where users could permissionlessly create their own markets? For example, let's say you're a buddy whale, the R8 buddy coin, and you have 100K in it and you don't want to sell, but you're willing to borrow some USDT if it has collateral. Would you let people do that even if it meant higher fees and lower LTV?
Yeah. So if you're any token whale and you want to launch a market, DM me. We'll try to figure something out. But the route that we're trying to plan for is to go with the curator route, followed with the permissionless route in the future. But it might take some time. We're focused on the curator first, and the curator mainly will be enabling market with earning strategies as well. We don't want to create markets nobody wants other than the whale, right? We want to create a market that there's a borrower and there's a lender as well that makes sense for both sides.
Absolutely. Well, thank you, Lambro, for doing this space with us. I'm looking forward. Maybe we can do something after pre-compiles go live and talk about some of the things that are being enabled now. But you guys can check out Hyperdrive now today and start using some of the things we talked about here. And we look forward to seeing how it goes.
Yeah, 100%. Thank you for having me, guys.
Absolutely. Have a good day, guys. See you guys later.
See you later. Bye.
See you. Bye-bye.